In just the past 24 hours, as much as $315 billion in valuation has been erased from the crypto market, with over $1 billion worth of liquidation affecting 275,000 traders, and we need to talk about it. What's going on, guys? It's Crypto Dave here at Top Tier Signals, and on this Bloody Monday, we have got to dive into the charts and figure out whether or not Bitcoin is going to be able to continue into a bull market, or if we are seeing the beginning of a brand new bear market. So the question that everybody is asking is, why did this happen if just 1 or 2 weeks ago we were extremely bullish on Bitcoin? First thing I'll mention is something that we talked about last week, which is the fading Donald Trump Bitcoin narrative. As we all know, Donald Trump plans to have a very crypto-friendly presidency, but his odds of victory have been plummeting as of recently, and we've been overtaken by a new narrative, which is recessionary fears returning to the market, both here in the United States and also in other parts of the globe. At last week's FOMC meeting, the Fed announced they would not be changing their effective rate, and this is because they have not seen the full confidence that inflation is tackled here in the United States, and while they have noted plenty of progress, they're not quite where they want to be. And the silver lining to this has been, and was, that the labor market remained resilient despite the restrictive monetary policy, which was allowing them to keep these rates high and avoid changing or lowering the rates and pushing that off until potentially September or even into 2025. Unfortunately, after such a confident FOMC meeting, with the dual mandate seeming clearly effective, just 2 days later we had the U.S. Employment Situation Report, and this was a huge miss. The consensus unemployment rate was 4.1%, and we came in higher at 4.3. Consensus non-farm payrolls were expected to grow by 180,000, whereas we only grew by 114,000. Private payrolls were expected to increase by 155,000, whereas we only increased by 97,000. And then finally, it was expected that the average hourly earnings would see a slight uptick by about 0.3%, but it only came in as 0.2%. So why is this important? What does this mean? Well, through this restrictive rate policy, there have been recessionary fears that have largely faded because the labor market remained so strong and inflation was coming down. And it's the dual mandate of the Fed to provide both stable pricing as well as a fair and competitive labor market. And to this point, that's exactly what we've seen. We've had our inflationary peak back in June of 2022 at 9.1%. Our last CPI reading came in at 2.4, which is plenty of progress, and the entire time the labor market has remained strong. The problem here with this report that we got just 2 days after the Fed announcement is that it was contradictory to this dual mandate. The monetary policy is still restrictive, inflation is coming down, but now we're starting to see a weakening labor market where unemployment is starting to rise. Non-farm payrolls and private payrolls are not growing nearly as expected. This could be an early warning sign that the labor market is starting to struggle and something in the economy might break. And with how forward-thinking financial markets are, they are ready to price something like this in. Beyond this, we had a pretty significant lineup of earnings reports last week, including some big tech companies that largely came in as a miss. Take Intel Corp, for example. The expected earnings per share was around 10 cents per share, and they reported an actual earnings per share of only 2 cents per share. This was an 80% miss. Following this, they announced a plan to lay off about 15,000 employees. So not only are we seeing the economic data reflect a weakening labor market, but we're also getting reports of major companies like this significantly slowing their growth, having to cut out employees. And these are the companies that we expect to have these high growth numbers. These are the tech companies, the leaders of the market. And to see that these tech companies are slowing down, that they might have to lay off employees after we just got data that the labor market is weakening, this is not a positive sign when it comes to economic prosperity. Beyond this, we can just look simply into the price action to see that things are not so strong. After a confident rebound following the Trump assassination attempt and the increased victory odds and all that positive juice, we set in yet another macro lower high, failing to reach that $70,000 mark, failing to test these significant range highs and push higher, and then we couldn't even set in a higher low. We mentioned this last week. There were several different order blocks, 66K, 64K, 62.6, even 58.7. These were all order blocks that we could identify in the lower time frames that we could not catch a bid at. We were not able to set in that higher low and proceed in that general upward direction. And this is very important. You get those signs of strength, but you need to see the follow through. And this was a point that we stressed last week, and it's not what we got. Take a look here at the 21 and the 50 exponential moving average on the daily time frame. We've hammered this moving average cloud as an important indicator as to the direction of the market. And we did get a crossover the 21 crossing over the 50, which is generally a bullish sign. We got a couple nice retests acting as support, but ultimately, upon the second retest, we failed to hold this level, and now we're seeing the 21 crossing back below the 50. So despite the nice upward movement that we've had in the past several weeks, we were not able to sustain this type of movement, and we couldn't catch a bid until the $51,500 order block, where we're currently seeing price bounce from. This is going to take us to a new thesis and a new narrative. The Donald Trump Bitcoin narrative is fading, the recessionary fears are returning, and it is clear as day that this corrective period for Bitcoin and the broader crypto market is going to be more extensive than most people, myself included, initially thought. The reality is simple. The confidence is not there. The capital, the bullish follow through on the volume is just not there. And we are not ready to set in new all-time highs. So now I'd like to point your attention to the weekly time frame for Bitcoin. And I want you guys to notice this $44,000 to $47,000 range that we have here on the weekly time frame. We can see that in several instances in history, this has been a significant level of both support and resistance. We can see here initially in September of 2021, this level came in as a higher low. We found support. We moved higher to set in our all-time highs for Bitcoin. And on the way back down, we did find some temporary support in December of 2021. Once we broke below this range, we back tested it a couple different times in the bear market of 2022, and we found this level acting as resistance, whereas it had previously acted as support. Fast forward all the way to January of 2024, and we saw this range act temporarily as resistance after the Bitcoin ETF launched, but ultimately we shot past this level as the launch was very successful. There were a lot of net inflows, there was a lot of positive speculation and sentiment surrounding the upcoming halving and what the Bitcoin ETF could mean overall for Bitcoin's price. And we absolutely shot through this level in a very exuberant way, where we really did get pretty overvalued here in the short term. So the main thing I'm looking at on this weekly time frame is this imbalance that we have with this $44,000 to $47,000 range. We would like to see price come down to this range and test it as support to fill that imbalance and establish that on a higher time frame, on a macro scale, there are buyers willing to come in at this discount range and actually turn a previous level of resistance into a confident new level of support, hopefully setting in a bottom for Bitcoin before things move higher. So guys, I just want to throw that on your radar. This $44,000 to $47,000 level could be very important here on the weekly time frame. We're going to want to keep an eye on that level. And now you might be thinking, if Bitcoin were to go back into the mid 40s, this would be a pretty scary sight to see. And you'd be correct by that. It would be a top to bottom correction of as much as 40%, which is no trivial correction, even in crypto. It's painful. It's very hard to watch. It leads to a lot of capitulation and a lot of weak hands folding and turning over their bags. But if we take a look back in history at some of our previous bull markets, we can see that even a 40% correction is very typical and sometimes necessary and healthy for the overall cycle. Taking a look back at our 2016-2017 bull market, we can see that we had 6 different corrections of over 30% up to about 40% for Bitcoin. 6 separate times on the way up from just $1,000 per Bitcoin all the way to 19K. 6 separate times we had a correction of over 30% up to 40%. And every single time we were able to find buyers coming in at these discount territories to drive price higher. And they were healthy resets for price action. Nothing can go up in a straight line and nothing can go up forever. So these corrections are very healthy and very necessary. And we can see based on history that when we've gotten these significant corrections, they've led to greater expansion for the space. Fast forwarding to our 2020 and 2021 bull market, we can see that we had a couple minor corrections of about 20%, 25, 30%. But notice what happened in the summer of 2021. We had a top to bottom correction of 55% before setting in a bottom and eventually pushing price higher and setting in that new all-time high. And if we take a look here at our current cycle, we really haven't gotten a correction that's been this significant. We've gotten plenty of minor corrective periods, 22%, 20, 21, 21, but we haven't really gotten anything in that 30, 40, or 50% range until now. So I don't want to scare people away. I don't want to fear monger. I want you guys to understand that even as painful as this can be, it is a healthy and necessary step, even in a bull market for crypto. So if we were to return to that $44,000, $47,000 level and find some support at that range, it wouldn't be the end of the world. It would be a correction that is pretty in line with what we've seen historically. Even taking a look at Bitcoin's growth since its cyclical lows compared to our previous cycles, we can see that we're perfectly on track. As it currently stands, Bitcoin is up 259% since its low in 2022. This is a bit lower than the 261% we saw in the previous cycle at this point in time, and it's a bit higher than the 185% that we saw in the 2016-17 cycle. So we're kind of right on pace. And if you're trying to compare time frames, previous returns, we're right where we're supposed to be. So there's just no need to panic. Moving over to Bitcoin's stock to flow model, this is a relationship between Bitcoin's supply issuance, its current circulating supply, as well as its price. We can see that we're right here in the middle of a market cycle for Bitcoin. We're in that post-halving lull where Bitcoin tends to have a pretty extensive correction. We saw it here in 2020. We saw it here in 2016. This is nothing new. And if we're trying to gauge time frame, if we're trying to look at previous market cycles and how we can expect this market cycle to shape out, we can see that there is plenty of time before we could expect an all-time high. According to this model, there's still up to a year that this bull market could play out. So the only reason I bring this up is I don't want you guys to stress. I don't want you guys to panic. These things can be very difficult to stomach. Believe me, I balanced my portfolio this morning. I nearly threw up. Fortunately, I allocate a responsible amount of money to the crypto space. I never overindulge when it comes to buying or adding to my portfolio. So these corrections, they become a lot easier to stomach. And guys, this is going to lead me into my next point here, which if you are somebody with some cash sitting on the sidelines, or you've managed your money well, and you've got some capital to throw around, we're now looking at some deep discount territory that could be advantageous in the long term. Now, I want to take you guys back to May of 2021 because I think this is a great example of the price action that I am personally expecting over the next couple of weeks, even the next couple of months. We can see here that Bitcoin had a major capitulatory candle opening around $42,000, getting as low as $29,000, and finally closing around $36,000. And this is generally what you see with a capitulative candle. You have that major move down until you finally hit the order block, bringing price up about halfway through the candle. And what tends to happen afterwards is an extensive bleed out period of time. Take a look. So by simply considering the price action that we've seen in the past, we kind of have an idea of what to expect. We've had our capitulatory candle. It's just a matter of bleeding out, fading out that bearish momentum before setting in that bottom. And this can take several weeks. It can take a couple of months. So we should be prepared to bleed out here in the short term, even if we're not setting in some other significant low. So I just want you guys to be prepared. This is not going to be the exact bottom, in my opinion. I think that we probably have some time to bleed out, chop around, and truly shake those weak hands out of the market. Moving back over to the present, we can see this same style of capitulatory candle playing out right now. We have a large bearish candle that ultimately comes down and tags an order block before closing much higher, about 50% of the way through the candle. And if you ask me, I'm expecting that same type of bleed out to occur where we test those capitulatory lows, we grab some liquidity, we bleed out, we shake those hands out, but ultimately, overall, the bearish momentum will be fading, we'll be forming that bottom, and the opportunity is there to accumulate some bags. When there's fear, when there's blood, when there's capitulation in the streets, there is also opportunity. So I want you guys to bear down, stay convicted, stay responsible with your capital deployment, and find those discount opportunities that are going to propel you in the long term. Well, guys, that's going to do it for this video. If you enjoy this type of comment, consider leaving a like, subscribe to the channel so you don't miss out on any important updates, and let me know what you guys think about this price action. Are we headed for a recession? Is the bull market over? Are you stacking coins confidently? If so, what are you stacking? There's a lot to talk about here. We're definitely going to keep covering this on the channel, but until then, I'll catch you guys in the Discord. Peace.